half an hour from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Avril Hong in Singapore.
Good morning and happy Friday to everyone from the Asia Pacific. I'm David Ingles here in Hong Kong. Let's get to your top stories today. Markets looking like this, looking cautious, really trading across the Asia Pacific this Friday as the White House wins this temporary court reprieve from the ruling that struck down most of President Trump's Liberation Day tariffs. Now, the president also met with Jay Powell for the first time in years, putting pressure on the Fed chair to lower interest rates. Plus, we'll hear exclusively from Taiwan's deputy foreign minister, who says trade talks with the U.S. continue despite legal questions over Trump's tariff policies.
And I'm Haslinda Amin at the Shangri-La Dialogue here in the Lion City. More than 500 delegates from 40 nations are gathering to discuss critical security challenges in the Asia Pacific and beyond.
And I'm here at the Sohn Conference in Hong Kong, where it's just about to get underway. We'll hear all the fresh investment ideas covering those. Also, we've got David Dredge joining us from Convex Strategist. He's the CIO.
Good morning. Welcome to the show. Final one of the week before we meander and disappear into the weekend. Before we get to that, the markets seem to be disappearing already. It seems like a non-event as far as the current pricing is concerned. As you can see, we're effectively flat on the Asia Pacific. We're lower on the S&P futures, giving up, of course, some of the gains front-loaded at the start of the week. The dollar is again under pressure, as you can see here on the screens. And most of these markets, including Korea, by the way, which did get quite a decent pop on Thursday following the more dovish than expected BOK there. Singapore's coming online. Bonds are catching a bid, but certainly you do understand, of course, when you look at the 2 and 10 year in the U.S., of course, that might seem the direction of travel when we get to that point in a couple of hours or so. So in other words, limited gains perhaps, unless we get a catalyst going into the weekend. Right, just a sort of a brief snapshot of where we are, right? So 7 straight weeks of gains in the Asia Pacific. Really good gains across some of these Chinese listings overnight. And individual stories here. You have JD.com. I think part of what they're offering will now be again on Xiaohongshu. That's number 1. Number 2 is Yum China approving this buyback into the second half of this year. Li Auto came out with earnings. And NetEase, just as a function of where we are, flip the page, please, on the Hong Kong listing specifically. We are extremely close now. We could be testing. We could actually see that all-time high before the end of this session today. That said, the direction of travel as it pertains to the currents right now are to the downside. We're looking specifically at the bond market this week in China, following, as you can see, where effectively we are here on nominal all-in yields here on the 10-year. 171 effectively puts us at about a 7-week high as far as that's concerned. And that's been consistent really on the short end and also on the long end of the CGB curve at 1.9%. Okay, I do believe we have some news coming out. Avril, why don't you take this one?
Yeah, I mean, you're talking about what we're seeing in Chinese bonds, right? I think all of that is tied into the tariff ruling or Trump's tariff agenda. We're since hearing that the Trump team is mulling a stopgap tariffs under the Trade Act provision. This is part of Wall Street Journal reporting. And of course, the news in the past year or so has really been about this tariff ruling. They've since appealed it. They're getting a temporary stay. So let's bring in our Bloomberg senior editor, Derek Wallbang, for more on this. So Derek, based on what we're hearing, the Trump administration does seem to be exploring other avenues for implementation of these tariffs. But talk to us first when it comes to the appeals process. What's next?
Well, that's right. And look, Donald Trump has said that there are other avenues to try and go through the processes he wants. He actually mentioned one in a Truth Social post. There's a possibility that he could always go to Congress, the Republican-held Congress, to try and do things. He warned, though, that would take weeks to months of additional delays. So every single option that the Trump administration may use to try and get this stuff through, if they can't go through the method that they used for the Liberation Day tariffs, would be something that would be delayed or more complicated or something of that venue. They'd like to use the authority that they did there. Now, that was dealt, as you quite rightly mentioned, a fairly significant setback earlier this week when it was ruled not possible by a court. That decision has been paused by an appellate court. This is going to work through the U.S. legal process. In the meantime, though, it has kind of complicated the idea that the Trump administration in this 90-day pause window was going and trying to do deals with individual countries. We really haven't seen a ton of deals come through with that. We've had the UK. A lot of others are said to be maybe close or near, but haven't gotten over the line. And so how countries respond to this, I think, is a real key question. Scott Bessent, the Treasury Secretary, said today that he hasn't noticed a change in the last 48 hours from some of the countries he's negotiating with. But surely this is going to be factoring into the calculations in world capitals.
Derek, David here, what about specifically on the front with the Chinese? Are we hearing any developments, particularly given the sort of week we've had on, I think when you look at Harvard and, of course, foreign students, and I'm wondering how that's muddled conversations, if any?
Oh, it's a great question, David. I think Beijing will be taking everything in. Scott Bessent, when he was describing the China talks, said that they were, quote, a bit stalled. So read into that what you will. He also suggested that it could need a call between Trump and Xi Jinping to kind of break through and get those to where they need to go toward a resolution. That's something that the U.S. side has been talking about for a while, the possibility that there could be a Trump-Xi call in the offing. Nothing is set. Nothing is publicly, put forward on that, but that was where he was. I mean, certainly, though, as you quite rightly noted, China is paying attention to the university stuff. I think that is resonating abroad in a way that maybe folks in the U.S. don't fully realize. I think, certainly we're sat here in Singapore, Avril and I, and you have a prime minister who has Harvard on his resume. The previous prime minister, he has a degree from Harvard. The current elected president, he has a degree from Harvard. And so any news about Harvard is noted everywhere. And you've got, I know this is the case in Hong Kong and in mainland China. Certainly in Singapore, you've got thousands on thousands of students who are getting ready for their visa interviews and who've been thrown into a certain amount of uncertainty with regards to their educational plans for semesters that kick just in August. So it's all kind of coming together with that uncertainty, and everyone is paying attention to all of those lines.
Yeah, a U.S.-China trade truce, but not really if you look at the fronts opening up when it comes to student visas as well as tech. Our Bloomberg senior editor, Derek Wallbang, for us. Thanks so much. Now, we're also seeing friction between the U.S. president and the Fed chair, Jerome Powell, this time asking again for the Fed to lower interest rates at their first in-person meeting since the president's inauguration. Trump told Powell that not lowering rates is putting the U.S. at an economic disadvantage to China. But the Fed chair responded that the path of policy will depend on incoming economic information.
We saw, the president and I both saw the statement that the Fed put out after the meeting. That statement is correct. However, the president did say that he believes the Fed chair is making a mistake by not lowering interest rates, which is putting us at an economic disadvantage to China and other countries.
Yeah, there we go. So while rates perhaps haven't fallen just yet, what has is, measures of implied vol and volatility. So I think that's something to consider as we go into June, of course. Reason I bring that up is because our first guest coming through, at least in this hour, out of the Seoul conference taking place here in Hong Kong, annual gathering there, of course, where you have hedge fund managers coming to present their ideas on markets, vol, growth, supply chains, and everything in between. In fact, let's cross it over now to Annabelle, who's there with us, really with a focus specifically here on volatility, Belle.
Yeah, that's right. Joining me this morning is David Dredge. He's the CIO of Convex Strategies, and I think we can obviously talk about what's top of mind for you today. But I think, is it going to be the bond market and what we're seeing there?
Well, hi. Thanks, Annabelle. Thanks for having me. Yeah, I think I'm in the business of risk mitigation, risk protection. I'm not in the punting business or the predicting business, and I think structurally everybody's well aware, and I've been writing and talking about it for years, maybe even decades, about the structural imbalances in the global holdings of fixed income, the sort of myth that was constructed through the regulatory application of bad financial mathematics, that bonds, particularly sovereign bonds, sit somewhere in the regulated financial industry between riskless, 0% risk-weighted asset on banks, to risk-reducing in liability-driven investment schemes where levering bonds is meant to reduce the risk of the portfolio, or most simply in a 60-40 balanced portfolio where the bonds are considered as risk-mitigating, risk-reducing. But what we've learned, certainly in the last 4 or 5 years, is the bonds are the risk. And what we're seeing again and again is the bonds driving the risk cycle and driving the policy cycle as people try to cope with that. Obviously, Japan and U.S. Treasuries last week.
Well, exactly. That's what I was going to bring up is that auction, for instance, we had with the 40-year bonds in Japan this week, and investors really seem to want more of a premium now.
Well, I think the problem is a structural imbalance in the existing holdings, what I've dubbed as the Hunger Games of bond issuance, as the traditional buyers of bonds, which in the last 15 years have been predominantly central banks buying their own bonds, foreign central banks buying bonds for their FX reserves, and regulated financial institutions, banks, insurance, pension, loading up on bonds at terrible, terrible prices, extraordinarily artificially manipulated low yields, with tons and tons of leverage, saying that that's not risk-taking. And now those people are full. They've had enough, and yet the supply of issuance keeps growing and growing and growing. And the examples last week, certainly with the long-dated bonds in Japan and around the world, the noise we had a few weeks ago in Taiwan, get down to this structural problem in the asset liability mix of these financial institutions. So insurance companies who loaded with favorable accounting treatment on duration to accommodate the massive expansion of their liabilities as interest rates got forced to zero and below. Now, as interest rates rise, they need less duration. But the hidden implicit leverage in how they owned callable note structures or levered gilts in the case of the UK LDI structures, they're actually growing in their duration exposures just as they need to buy fewer bonds. And that's creating a bottleneck in the bond issuance.
But something else that's also can play into it is the moves of government as well, because for instance in the UK, and you just bring it up there, but there's the plans for Treasury to gain backstop powers.
Yeah, so I wrote a note. I write notes every month that go up on our website for our investors, and I wrote one back in 2022 called Is Sharp World Closing? Sharp World is what I call the whole mythical fantasy land of financial mathematics that gets overlaid in regulation of financial institutions. And I said because of this dynamic that people won't want to own the bonds, and the guys who do own the bonds have been fiduciaries doing it with somebody else's money, regulated to do so with bad financial math. And exactly what you said, I hinted in that note that we're looking at a future of financial repression and even, in a sense, capital controls. And so when the UK says we're going to force UK pensions to own UK assets, well, that's a form of capital controls. When Scott Bessent says he's going to permanently exempt the SLR for U.S. Treasuries, for U.S. banks, well, that's a form of capital controls. Now you can apply leverage in the banking system to your domestic sovereign bond at a preferential rate relative to other zero risk-weighted assets. So why wouldn't Japan do the same and exempt JGBs to incentivize Japanese banks to own JGBs over owning other zero risk-weighted asset bonds? So all of that feeds this same problem: who's going to buy the bonds?
I want to talk about capital control maybe in a different market, because China, of course, is another market that has those kinds of measures in place. The bond market there has looked pretty different, though. So how does that also factor into your thinking? And also, I know you've got a view that they've been the sole contributor of credit impulse in the world for a decade now. How does it stack up exactly?
Yeah, China's like such a critical player, and obviously critical in the current tariff trade imbalance correction issue. So China, again, has its own structural imbalances, really driven by its explosion of credit post-GFC, as I said, being sort of the sole credit impulse for a decade post-GFC, all the while maintaining extremely high capital controls and essentially a pegged currency, even in the last 3 years going away from their own basket methodology of how they fix the currency and essentially just holding it against the dollar, give or take 7.2. Well, that allows these imbalances to build up and not correct as the market mechanism of all the borrowers and savers and investors and hedgers and importers and exporters deciding amongst themselves what they think the fair currency value is and where investment should go. And so China obviously is going through a large deflation pressure at the tail end of that credit buildup, unsustainable that it was.
David, thanks very much for your time. I did want to ask you about the Japanese carry trade, but we've run out of time. But that was David Dredge, there, CIO at Convex Strategies. Dave.
Right, fantastic. There with Bell. We'll be back with Bell there at its own conference, of course, just nearby the office here. Counting down to the open of trade here in Hong Kong, in Shanghai, and in Shenzhen, and we are called lower on futures. The weather isn't exactly a 10 out of 10. So yeah, avoid the white pants today unless you want to do some random artwork down below. Anyway, opening bell 14 minutes away. This is the China Show.
Currency is not part of our trade negotiation with the U.S. I think that is an overstatement about how our central bank are capable of and are willing to do. I think we respect. We don't want to see a very big swing in our currency like any country in the world.
Taiwan's Deputy Foreign Minister speaking exclusively with the China Show co-anchor Yvonne Man. And in the same interview, the minister told us he's optimistic over progress in trade talks with the U.S., but technical details still need to be ironed out.
The trade talk went smoothly. We are continue to have a conversation. And there are many technical details to settle, like any trade negotiation. Never been an easy thing to do. So we are now in the process. 90 days, a little bit short, but we want to come up with some good, big and beautiful package to offer, and they will serve the dual purpose of meeting the U.S. need.
You mentioned that there are some technical issues to still be ironed out between the U.S. and Taiwan right now. Can you tell us what they are? I mean, what are sort of some of the priorities?
I think the first thing is to adjust the mutual expectation at the same level.
Yeah.
U.S. complaining about the non-trade barrier. We are working on that. We are in the negotiation to identify those areas they have a complaint, and we are thinking about how to one, protect our own people who are engaging in those industries. Second is to meet the needs. Third is in the context of our larger economic transformation.
Does Taiwan have any red lines in these negotiations or things?
I think there are some very important constituents. We want to protect our farmers, certainly, but we know that we have to be very vigilant about that. We also care very much about food safety. I think that is also another area to focus it on. But otherwise, we have the will to open our market to the U.S. product, especially.
Okay. Can you give us some details of
agriculture?
Agriculture?
Yeah.
Okay. Are any procurement plans in place right now?
Procurement plan, as announced, such as the LNG from Alaska. There's a big project. We are not only procure the LNG from Alaska, we are willing to, we have signed a letter of intent with the Alaska state government, not only the state government, but the firm they support to invest in the whole project, not only the buying the LNG, but also investing in the pipeline as a processing factory.
We heard from Taiwan, we heard from TSMC saying that if the U.S. were to put tariffs on chips, for example, that might derail Taiwanese companies' investment into the U.S. Can you explain the logic?
I mean, the thing is that you have a high tariff. then they probably either have a lower sale volume or they raise their costs. They reduce their cash flow. That to be invested in the United States. So we would like very much the U.S. to see this as an interconnected issue, the tariff and the investment. So the lower the tariff, the more cash flow they have to invest in the United States. We understand fully. And we also, I think TSMC is willing to tap into the talent of the United States as well as some leading technologies such as quantum. I think those things that need a big capital investment in the U.S. So we are going to do that, but don't let tariff get in the way.
Are you confident that you can get a deal with the U.S. in 90 days?
We are very optimistic. I think we can put it that way. From many reactions, I'm not in the whole face-to-face negotiation, but the knowledge that I have, the information that I have is that the whole thing has gone smoothly, and both sides continue the conversation.
Yeah, there we go. That was Yvonne, of course, there with the Taiwanese Deputy Foreign Minister speaking to us exclusively on Bloomberg Television. Right, going into the open today, just under 7 minutes away, we're called lower, 1% on the Hang Seng Index. Plenty more ahead. This is Bloomberg. Right, welcome back. Under 5 minutes away, and yeah, it's not looking promising. So take the day off if you're a bull out there. Take a long weekend. Why not? It's raining outside anyway, so if you're still at home, don't come to work. Anyway, no, don't take my word for it. Just tell your team first. Don't just not show up. Speaking of a week that's largely, I wouldn't say forgettable, but I mean, if you're long these EV stocks, it's certainly a week that you perhaps want to forget. You know, we started out the week with the massive drop, of course, BYD cutting its prices, effectively taking down almost the entire EV space with it on price in markets. And as you can see, BYD is one of the worst performing stocks, if not the worst performing actually on the major benchmarks. And as you can see, we're now at a key level, $400 and a 50-day moving average there, among many things, of course, we're tracking today. Avril.
Yeah, I think the other EV maker we're watching, Huawei, right, set to launch this ultra-luxury EV. We'll be watching for prices, for specs. Other than that, also keeping an eye on Wang Yi in Hong Kong, and he's there as part of this establishment of a new mediation system for resolving international disputes. Watching the open as well, the Hang Seng, I think, headed for a weekly loss. That being said, we are seeing quite low when it comes to volatility. A couple of other stocks that we'll be watching, including NetEase, headed for yet another fresh record. You're watching The China Show. The open is next. This is Bloomberg.
Welcome back. Happy Friday. Welcome as we go into, okay, there we go. So declines going into the open today, unsurprising given it's actually quiet on the news front, and I think we have Man United in town here in Hong Kong. So that might also be perhaps why we're seeing a swoon in these markets, this part of the world. But yeah, we can talk about it later. 1% declines here in Hong Kong. Although overall, Avery, I believe we're still on track for 7 weeks of gains on the Asia-Pacific Index.
Yeah, I mean, this quieting down of the US and China in terms of their tensions, right? But I think that's also partly figuring into trade on the mainland yesterday, today as well, potentially. We saw how the tech restrictions, they might be ramped up a notch when it comes to chip design, software. That certainly helped the likes of Empyrean. Just a day ago, we saw, I think, quite a strong surge. The idea that this is going to spur potentially adoption of local tools when it comes to chip design software. But as you said, you know, it's really quite soft today, quiet on the Chinese front. I think we are also headed for another weekly loss on the CSI 300. Let's flip the board and take a look at the Hang Seng. Maybe declines there as well, where we are expecting another decline for the week. Perhaps BYD not helping in all this, as you flagged earlier. But aside from that, a couple of other stocks that we were watching, they've been doing well of late, including NetEase, right? Feeding into that pursuit of happiness when it comes to youth and consumption. Down today, we're also keeping an eye on the likes of JD. It's tied up with Xiao Hongshu, so maybe making some of its products a bit more accessible when it comes to availability on the social media app. But certainly, it doesn't look great. Down day at the early goings of the Friday trade, David.
Yeah. In case you thought Avril was just going rogue, and the reference to happiness there, the pursuit of happiness, is the title, in fact, of one of the latest reports coming out of BofA. Joins us in about 40 minutes from now. That's effectively their investment advice as it pertains to exposure to the Chinese mainland. Right. Speaking of H, Harvard has been in the news this week, right? It's won this longer-term reprieve from the White House ban on enrolling international students, handing the nation's richest university a victory in its battle there with the Trump administration. Let's bring in Min, our China correspondent, to take us through what we know so far in this win from Harvard.
Yes, so they're getting this extension from the court partly because the U.S. government has softened its stance as well. Instead of asking the university to stop enrolling international students, it's saying you can enroll them but cut the percentage from 30% to 15%. So that's one. It's getting a lot of attention from China, partly also because this has really expanded beyond just Harvard to targeting Chinese students in particular, right? And initially, the government concern from the U.S. was about the misconduct of students, that they are participating in protests, that these elite universities are ideologically biased against conservative values and tolerant of anti-Semitism. But when it comes to the revoking of Chinese student visas, though, it really harks back to that climate back in Trump's first term when, if you remember, there was a lot of suspicion over the Confucius Institute at the time. The Trump administration then had said that this was not just a language class institution, it is also an overseas propaganda arm of the Chinese government. So then the Trump administration had designated these institutes as foreign missions. And in 2018 as well, the Justice Department investigated Chinese American researchers, arguing that they are stealing American secrets and hiding their ties to the government. That program was shut down 4 years later because of this criticism that it was promoting Asian American discrimination. But now with Trump back in office, we're seeing this sort of sentiment that is coming back to the forefront, maybe becoming a little bit more institutionalized again.
And Min, how has China responded to the U.S. move to revoke Chinese student visas?
Yes, the Chinese response has been very measured. So the Foreign Ministry yesterday had condemned the move, saying that it harms people-to-people relations and the rights and interests of these international students. Also saying that it's politically motivated, that this is a discrimination that really showcases U.S. hypocrisy over freedom and openness. But what really struck me, though, is that the Chinese government has not retaliated, even in a symbolic way, because you look at, obviously, the number of U.S. students in China, it's much fewer than the number of Chinese students in the U.S., which was over 270,000 last year, compared to less than 900 students, American students in China. So China could have frozen the visas of these U.S. students as a symbolic move, but they didn't do it, which shows that maybe China is concerned about not rocking broader U.S.-China relations after they had just achieved this temporary truce. But another point to note as well, remember, President Xi has long been a proponent of the idea that people-to-people exchanges is the foundation of healthy U.S.-China ties. He pledged back in 2023 to bring 50,000 American youths to China over the next 5 years. And the fact that he attached his name to that effort perhaps could be another reason why China may be less willing to retaliate.
Min, I'm sure social media has a lot to say and kind of weighing in on all this. What are you hearing in terms of the chatter?
Yeah, it's been pretty mixed so far. Obviously, there are people who are quite up in arms about this and hoping that the government would do more beyond verbal condemnation. So there was a comment here that say this barbaric act of the U.S. is similar to Soviet Union's ousting of Chinese students in the early 1960s. It's sad, it's an intentional humiliation, and China must do more to take some actions and not just condemn it. But others are saying the opposite thing, that China should be kind to American students studying in China and essentially pray for better times, wait for the death of this generation of people like Trump and Rubio. And yet others are saying we should let all our excellent children come back to study in China and win honor for our country because Chinese universities are no worse than U.S. universities.
Oh, wow. Okay. Min Min Lo, our China correspondent, my folks would have never had the problem. I wasn't smart enough, nor could I afford to go to Harvard. But anyway, of course, I'm glad to be here telling the story. Okay, let's have a look at, so we're wrapping up the month of May, going into the weekend with PMI numbers out tomorrow, which is really my sort of reminder that we are end of the month here. So how have we done cross-asset? Stocks are within, I think, 1% of the all-time record. So we've done well in the stock market, as you can see, 5.5% over the last month or so. Treasuries and the U.S. dollar, big sort of overlap between the two narratives there, have had a challenging time. High yield has done well. Fixed income, generally speaking, when you look at corporates, short duration, investment grade have also done decently amidst the backdrop of stocks also obviously doing quite well. 7 weeks of gains on the Asia-Pacific Index. Right, so where do we go from here? What's done well? What do we buy now? Let's bring in Janet Lee, CEO of BEA Union Investment, a specialist Asian equity and fixed income manager based here in Hong Kong. Happy Friday.
Happy Friday, David.
What of your strategies have done well recently?
Well, so we have investors in Hong Kong, mainland China, and across the globe.
Yeah.
And I have to say that the investment appetite has been pretty mixed. So when we saw volatility was heightened earlier on, some investors actually divest because of the volatility. But at the same time, we also have investors who continue to invest and top up and to buy at the low time. So I'd say that the observations is pretty diverse. Pretty mixed. But back to what you asked just now, perhaps investors will be thinking, oh gosh, the interest rate, the rate is low in Hong Kong in fixed deposit. So what should I do with my savings? And same for many pension investments, reserve funds as well. So I think first of all, well, nowadays, the only certainty is uncertainty.
Right.
But amongst all the different asset classes and investments, what might actually give a little bit of certainty perhaps would be the short duration bond investments in high grade, as now it's hard to look beyond too long term, and so by focusing more in the shorter term, that it kind of give more certainty and lower volatility. But whether that actually meets with the investment appetite and long-term growth would actually depend on the individuals.
Right. I think, you're right. It depends really on their risk profile and how they feel about the market. What roughly would be the range of all-in yield that I get with, say, short duration, investment grade strategies or funds specifically? What's on the table right now in case I simply want income while we get more certainty given the uncertainty?
So roughly, because it changed every day, but roughly last we looked was about 4.5%.
Okay.
And usually when investors, they invest for individuals, they like to do investment into those with dividends.
Yeah.
As many live off the pensions and monthly payments, so they prefer dividend payments.
And Janet, among these individuals, what are you hearing about how they feel about dollar-denominated assets?
Well, so it's, again, depends on where the investors are and where they plan to retire or where they plan to use the investments. Actually, I was in Europe last week and spoke with local investors. And so I think there were a couple of themes that came up in our conversations. So first of all, there were discussions about what's risk-free assets right now. And so that's kind of from the fundamentals to many of our global financial theory. And then secondly, it's de-dollarization. And of course, how practical it is or how long it takes would depend. But however, it certainly had aroused investors conscious into I have to diverse my investments. And we all know that in investment, it's always the golden rule of diversification. But how and when would, of course, be $1 million question. And so immediately we saw from the European investors that they were thinking about emerging market investments, Asia and China. And I recall having that conversation with my team 3 years ago when they were in Europe. The sentiment and the feelings towards China was pretty negative. But this time around, we felt that that's positive sentiment and genuine interest about investment opportunities into China as well as across Asia.
Are there specific sectors that they're preferring?
So just now, David mentioned the pursuit of happiness. So one particular sector which we observe that we find it interesting would be in the consumer spending and on consumer experience, because that's quite something developing and emerging in China, not just about the hardware, but the general experience about how people spend their time, how they experience entertainment. So that's a higher level than the basic hardware entertainment or gaming, etc. So that's potentially a huge market. And then secondly would be AI. So the development has been amazing and the growth potential is still unlimited. So these two are the areas that we have discussed with the domestic investors, and they find genuine interest.
Janet, I'm curious. If and when it becomes clear that the Fed will resume cutting interest rates, how do you think that should affect investor preferences? Equity to fixed income, and of course within fixed income duration.
Right. Well, if the Fed indeed resume cutting interest rate, and I presume that probably will present a more certain path, right? Because I think, as I said, the only certainty right now is uncertainty.
Right.
But usually in investment and financial markets, when we have certain uncertainty, then there's usually a path. So with with interest rate coming down, so bond price will be increasing, and generally that will be a interest of investments, right? People will deploy the asset, and so it probably will be beneficial across equity, fixed income, across the board as well.
And I know you guys launched an all-weather strategy back in March. This is for long-term investors who want cross-assets, I think, exposure. Right. Are you happy now with the relationship that bonds and stocks are giving each other? Because that disappeared during the inflation scare a few years ago. And I wonder right now if I can trust that correlation to deliver those long-term performance.
Yeah, exactly, as you said, right? In the older days, that equity, fixed income, they are in negative correlation, but nowadays they seem to move in tandem.
Yeah.
So our CIOs would always say that whatever we have been seeing this year has been unprecedented. Nobody has seen it before. And so the high correlation is not too helpful sometimes in diversification. But having said that, there are still various ways that we can add diversity to investments, like gold ETFs, another form of liquid alternatives that help to sort of complement the current high correlation between equities and fixed income, and to provide a better cushion to investments for the investors.
Oh, interesting. So gold is the new bond right now. But yes, interesting. Janet, thank you so much.
Thank you, David.
Janet Lee, the CEO of BEA Union. Investment, the short and also the long-term look across these markets. Now, coming up here on the China show, in fact, we've been referencing this rate here out of BofA, Winnie will be joining us with their latest take here on these Chinese markets and what she calls the pursuit of happiness, HAPPI, in case you remember the Will Smith flick. Anyway, there we go. Look at movers right now. BYD has now taken out the 400 level for the first time in weeks. Li Auto's going the opposite way. That's an earnings story. JD.com going the opposite way of the news flow. Fairly encouraging news as far as the Xiaohongshu tie-up, quote-unquote, is concerned. And Yum China, of course, approving that buyback for the U.S. and Hong Kong going into the second half. We're down 1.2% overall. Plenty more ahead. This is the China Show.
You're watching The China Show, and here are some of the corporate stories we're following. Embattled Hong Kong property developer New World has landed more pledges from banks to help with an $11 billion loan refinancing deal. Sources say this brings total commitments to about 40% of the total, with more banks set to join in the coming weeks. New World aims to complete one of the city's largest ever corporate refinancing deals with more than 50 banks by the end of June. The U.S. Justice Department has asked a federal judge to dismiss its criminal case against Boeing over 2 fatal crashes of its 737 MAX jets. The reversal in the long-running case over the disasters in 2018 and 2019 comes despite objections from some family members of the 346 people killed. The request was disclosed in a court filing that's part of a proposed settlement prosecutors reached last week. Meanwhile, U.S. Treasury Secretary Scott Bessent says talks with China are, quote, a bit stalled. But speaking with Fox News, he says he believes Beijing will come back to the negotiating table in the next few weeks. He also says he expects to speak with the Japanese delegation on Friday. White House trade advisor Peter Navarro earlier told Bloomberg other countries are still negotiating with the U.S. for a trade agreement.
This morning, we were getting plenty of phone calls from countries saying, we saw the ruling, so what? We're going to continue to negotiate in good faith. There's going to be, within the next, say few days, because that puts me too much on the spot, but you will see a cascade of new deals coming out in the near future, and these will all be good for the American people.
And you have defense ministers and senior military figures in Singapore for the annual Shangri-La Dialogue. You have John Moolenaar, who chairs, of course, the U.S. House Select Committee on Strategic Competition between the U.S. and China. Well, he says that Washington is seeking to reset its ties with Beijing. He spoke with our colleague, of course, Has, on the sidelines of that forum.
The end goal is to have a relationship with China that acknowledges the reality that their government is moving in a very different direction than they promised. And we have to reset that relationship. If China were to change course and promote actual peace and be responsible in the world stage, then I think, that would be healthy for the whole world. But if they continue down this path, it's going to be a threat to the world. When you look at their close allies of Russia, North Korea, Iran, and the partnerships that they're forming, that is a threat to the entire free world.
Are we looking at a decoupling between the U.S. and China? We know Treasury Secretary Bessent says she's not after generalized decoupling, just in areas of critical interest to the U.S.
I think it's an area where we have to be strategic with sectors and make sure that we aren't enriching the Chinese military-industrial complex that can have weapons that would be used against us. And so, regular goods that are sold between the two countries, I don't think that's a problem. But when it comes to these critical technologies, AI, advanced batteries, uses for military equipment, I think we need to be strategic and recognize we don't want to see the further buildup of a very aggressive nation.
U.S. House Select Committee Chair on the strategic competition between the U.S. and China, John Moolenaar, with Bloomberg's Haslinda Amin. And subscribers can watch us live, see our past interviews as well on our interactive TV function, TV Go. You can also dive into any of the Securities or Bloomberg functions we talk about and become part of the conversation by sending us instant messages. Check it all out at TV Go. Plenty more ahead. This is Bloomberg.
Right, welcome back. So we're about just gone over 20 minutes into the cash market session. NetEase was one that we were and still are really tracking very closely. We thought, and probably have to wait a few more days here, that the share price would be testing its record high. I think it's been a couple of years since we've seen the 206 handle on shares of NetEase. 2021 was that time. In case we're pulling back from that against the backdrop really of a pullback broadly. As you can see, the Hang Seng Tech Index is down about 2%. Also, speaking of a pullback here, reversing really I think it was a record gain in terms of a daily increase here on shares of Zhong'an yesterday. And as you can see, it's a reversal. Perhaps, I think, and even more, 8.3% to the downside here on the company. Of course, the gains yesterday were down to sort of stable coin conversation here in Hong Kong. We'll table that for now. And of course, BYD has been really a focus of both local and foreign investors. And it is, as you can see now, down 12%, and then a further 3% now has taken shares below that 400 level, Avril.
Yeah, I mean, it's the stock that I think is proving to be a bit of a drag when it comes to the broader Hang Seng markets this week. But of course, it's not just EVs, it's some of these other tech names as well, to your point about NetEase, right? And how we were expecting it to be part of this consumption theme, youth like for gaming, I suppose. And, you know, we're seeing that sort of turn around at the end of the week. MSCI China also 1.5% down. Seeing Hang Seng, I think we're set for a weekly loss at this point. What's doing fairly well are these Chinese bonds. And of course, we've been keeping close watch on dollar China. We saw the bounce in the greenback the past couple of sessions, seeing dollar China at 7.18 at the moment. Other than that, It's really this specter of volatility that's sort of been eroded when it comes to the Hang Seng. We'll have a lot more on the way in the next hour. You're watching The China Show. Welcome back to The China Show. Here's a look at the Hang Seng half hour into the session. Certainly tracking some of these losses we're seeing across the Asia Pacific. I think part of the tariff whiplash that we've been seeing, David. I mean, we were grappling with tariff uncertainty. Now you add another layer of legal uncertainty to the tariff story, right, David?
Yeah. So apart from, you know, what's that old adage, right? In life, you need a good accountant and you need a good lawyer. So on the accounting front, that's the tariff story. On the lawyer front, to the point you're making, this added layer of legal complexity. Yet, even if you have both, you're still not closer to the truth because really no one knows where this is going to land. But apart from that, right? So what's really happened, I think, consistent. We've talked about this at length. So the reason we're showing the Kospi index right now is, you know, central banks, apart from, I guess, the Fed and very few others, have actually leaned dovish. So there's the offset of lower rates, and that's really led to a really big day in Korea yesterday. We're giving back some of that, not completely all, 3-4%, in fact, on the construction index, I believe. Intraday, we're up still 50% on that number 2 ticker that you see on your screens. Right. Now, apart from that, so that's been fairly consistent. Price has been also very good. As far as equity markets go, MSCI World's now within, I think, 0.8%, despite the pullback we're seeing today. Let's call it 1% in terms of it reaching a record. The Chinese market is different in some ways. So you have, I think, the story this week was in BYD. The price cuts there. In fact, BYD is the worst performing stock on the major benchmarks, I believe, over the last 5 days or so. So we're down, I think, something like 15% with the declines we're seeing today. And that's now, in fact, taken I think, I wonder if we could, why don't we do this on air? Can we refresh this chart, guys? Because we've just actually now taken out the 50-day moving average. Yeah, it's 4014. Thank you so much. Taken out the 50-day moving average and also taken out the 400 level. There we go, live TV on your screens. So let's see how this all plays out. Avril.
Yeah, a fast evolving situation on a day where Hong Kong stocks have been slipping, right? We have with us now our senior equities reporter, Abhishek Vishnoy. Abhi, I mean, Dave was just talking about some of the tariff uncertainties and potentially, I think also that's kind of feeding into some of the more thematic plays we're seeing. But what is driving the broader, I suppose, risk-off on this Friday session?
Well, it's largely tariff whiplash, like you have been, mentioning, and apart from that, some weak macro data as well, which is feeding into worries about U.S. economy. So that sort of is weighing on the market. But if you look at the setup, I mean, it's largely again going into the direction of being overall negative for U.S. assets and a bit marginally positive for the relatively cheaper Asian assets. So it wouldn't be a surprise that Asian markets sort of come out of this phase, and there's a bit of Friday effect as well. So to be honest, not many are reading too much into this risk off, because if you look at the indexes, I mean, just pick any Asian index you want to, they are actually nearing one or the other bullish milestone. So the trend actually remains upward and onward.
Abby, tell us about NetEase. What's the obviously, we got very close to testing that record, which I don't think we've touched since 2021. But what's driven that specific stock up? What's the theme there?
Oh, that's a great stock. I'm glad you mentioned it. It's up 45% this year, and it's outperformed Tencent, which is the biggest bet on video games worldwide. The stock is up 22%. So the thing with NetEase is, it's actually a story not just about cheap valuations, but also about earnings growth. If you open up its peers, in terms of valuation and earning comparison, NetEase would be, would look way better, even better than Tencent on some of the parts. And as we have done a lot of stories recently, it's like a youthful consumerism and defensive appeal of the sector, which is adding and contributing to the valuation expansion in the sector, but the stocks still remain cheap. And on the earnings side, there are a lot of triggers, including legacy games doing well, new launches coming in, and that's why the stock has done pretty well for itself. If you expand it to what it means for the industry, NetEase I think is the second biggest video game related stock in China, and I think it was 5th or 7th largest in the world. So essentially it's a story which is sort of positive for the entire China gaming industry, entire China consumer or affordable consumer services related theme, and bodes well in parts and parcel for China being a tech bet. Remember, China had already overtaken US as the world's capital for gaming several years ago. It now commands a third of world's market share. So this really bodes well for the entire industry.
Abby, thank you so much. Abhi Shakvishnoi there in Singapore for us, right? So the notion of this pursuit of, the concept of pursuit of happiness, right? U.S. Constitution, Will Smith film, there's certainly the attitude of a younger generation, and in a moment we'll hear from it, BofA's latest investment theme as it pertains to China. So that concept, we actually talked about that also with our earlier guest, Janet Lee, about 30 minutes back. Have a listen.
Just now, David mentioned the pursuit of happiness. So one particular sector which we observe that we find it interesting would be in the consumer spending and on consumer experience, because that's quite something developing and emerging in China. Not just about the hardware, but the general experience about how people spend their time, how they experience entertainment. So that's a higher level than the basic hardware entertainment or gaming, etc.
Winnie Wu is here with us, China equity strategist at BofA Securities. And just to be clear, we're borrowing, in fact, that one from Winnie and her team. Your latest report here, The Pursuit of Happiness. What are these happy stocks here?
So our view is that overall domestic consumption still face a lot of headwinds, right? Ranging from, the continued challenges in job market, the consumer confidence, the property market seems to be rolling over, the deflationary pressure persists, and the headwinds from anti-corruption. But within that, Chinese people still want to enjoy life, and there are specific themes that seems to be playing out. So our happiness theme is H for health and wellness. So that include like energy drinks, for example, fresh milk teas. They are doing much better than the baijiu liquors and beer and general beverage. People are using more online healthcare, right, for more proactive, preventive healthcare management, and people are willing to pay for outdoor brands, which is growing much faster than the generic sportswear. So that's happiness and wellness. That's health and wellness. And second is affordable luxury. So, for example, in traveling, leisure travel is doing better than business, and the domestic hotel chains, affordable luxury hotel chains, are doing much better than the global five-star names. In EVs, in smartphones, local brands are offering better price performance. Functionalities keep improving technology advancement, so they are gaining market share from the global brands as well. Yeah. So the affordable luxury. The third is pragmatic. People are, sensitive to subsidies, right? So last year, the home appliances did well. This year, we see the mass market EVs are doing well, and the other potential subsidy or stimulus beneficiary could include some baby milk powder stuff. And the fourth is about personal experience, emotional value. So back to the earlier idea about, online games, video, people are still paying for the membership of, these online videos and games and music. And also people are treating themselves to small delights, whether it's cosmetics, pets, interesting new snacks, right? If you have an interesting new value proposition, young people are willing to pay for that. Yeah. And finally, it's about IP, right? Clearly, the IP toys earlier this year, the哪吒movie did really, really well, and that drives the sales of co-branded name. So we prefer these names which can bring happiness and the specific functional value, emotional value, or being very affordable to the more general proxy players in the consumer space.
Winnie, you've kind of talked us through all these consumer plays and sort of the Chinese consumer psyche amid all this. But I'm just wondering, how are they at this point kind of viewing US, China, everything's going on in the geopolitical backdrop? Is that, regardless of what happens, the focus is still on these domestic themes?
So, everything has a price. If we look at the market reaction from April 2nd to now, US, China, many other markets, Japan, India, Korea, very much recovered the loss from April 7th, and is trading to pre-tariff levels, index levels or valuation multiples, right? So that says, market has shrugged off the concern of the geopolitical tension or tariff concern. But many investors we speak to are questioning, skeptical of, is that really true that the tariff impacts are already being reflected? Is that really true that there's no downside risk to the underlying economy or corporate earning? So that's why, investors are a bit more skeptical about the chasing the large cap beta or market proxies, because index absolute level, we do think the upside might be limited for the China market from here. But it's not only China, right? Like 2 weeks ago, I was marketing in Singapore together with our India strategist. And I was saying China market, I think is 5 to 10% upside in the near term. And our India strategist was saying India market 2% upside in the near term, right? So that's why, we are more we think the index level might be range trade in the near future with limited valuation upside and potential earning downside. But, within China, we can still find the alpha generating opportunities, especially in the more domestic-oriented sectors that are less impacted by these geopolitical tensions or tariff changes.
To your point, we're seeing maybe not just India, but Chinese stocks, they've kind of been lacking conviction of late. What do you think we need to see for breaking out of these trends?
I think, next few months, high-frequency macro data are going to be important because with the ease of geopolitical tension after the Geneva Agreement, I think the expectation on strong policy stimulus or bazooka has largely declined. So, policy stimulus is unlikely to be a near-term strong catalyst, which leaves us to the fundamental, to the earnings. Companies that can continue to report better than expected earnings will probably be winning investors. So, as I mentioned, valuation upside is probably re-rating has largely happened year to date. And I think investor sentiment on China improved substantially over the past 6-9 months, right? After September last year, China policy pivoted. Investors now are actually having a much more positive feedback on China policy in terms of the potential policy put, right, when the market corrects. But so the sentiment has improved. Valuation has re-rated. It's going to go down to earnings if China can really, weather through all these geopolitical uncertainties much better than other markets.
I have a question for you. So the overlap between the HAPPI stocks theme that you mentioned and the earnings theme you just mentioned, right? And I'll just use these names as an example. I know you can't talk specific names. So BYD price cuts, EVs, and whether or not that means something for margins. We're just done with earnings. I think Meituan and the JD.com, sort of competition there. Are those domestic focus sectors an area of concern for you?
If you look at our stock list, we generally have a preference for more of the niche player rather than the proxy player. So, for example, within EV, we now currently prefer more of the mass market names rather than the proxy players. Also, within Internet, we actually didn't have any e-commerce name in our preferred list because many of them are platform benchmark players. But in the online gaming entertainment side, we are a bit more favorable. So within Internet, we'd prefer the entertainment stocks to the broader e-commerce stocks because many of the e-commerce are proxy players.
Final question for you. If I want dividends, is that still a popular? Is that still a reliable source of stability?
Yeah. I think, given we think the market will be range trading, then dividend yield still has its value, especially for downside protection. But within dividend this year, there are also sectors which are more sensitive to the global trend, right? The oils, the commodity, coal names that might face higher earning uncertainty, whereas the other domestic names like financials, banks might stack up relatively better. So within dividend yield, we do prefer the banks and, say, gold names. They still are, trading at decent valuation, 5-6% dividend yield, good downside protection, and very good earning certainty.
Winnie, it's good to see you. Have a great weekend ahead. Winnie with her out of BofA Securities. There's plenty more ahead here on The China Show. Happy Friday.
Now, defense ministers and senior military figures are in Singapore for the annual Shangri-La Dialogue. Bloomberg Insight anchor Haslinda Amin is there for us, and she joins us live now. Has, this is an important forum at an important time for the world, both economically and strategically.
Well, that's right, Avril. The world has not been this uncertain and this chaotic in decades, and a lot has to do with the Trump administration. Since taking office, we know he's talked about taking over the Panama Canal, Greenland, Gaza, as well as Canada, referring to it as its 51st state. Repeatedly, of course, it has also retrieved U.S. aid, and when you take a look at the United Nations, it's also voted with Russia, with North Korea, something that people could not imagine until now. So that's prompting a lot of uncertainty, especially in the Asia-Pacific region. Of course, the U.S. calls it Indo-Pacific. I mean, this is a region that has relied on the U.S. engagement to ensure stability in the region, to put Chinese influence at bay. But now, countries in this part of the world are questioning, is the U.S. really a reliable partner? We've seen how China has been extending its influence. We had Xi Jinping make his rounds in Southeast Asia in particular. And you know what? what, increasingly, countries here are also leaning towards China. Take Malaysia, for example. We have Anwar Ibrahim, the Prime Minister of the country, making a trip to Beijing 3 times in just 2 years. So the question really is the U.S. a reliable partner, or are other countries looking to fill the gap? China, for one, even Japan. Some say that the shift in its strategic influence in Japan is the biggest they've seen in about 70 years. And now Europe is also looking to play a bigger role. The likes of Macron, who will be making a keynote address later tonight. I mean, what will be his messaging? He is positioning France as well as Europe as a more reliable, as a more trustworthy and respectful partner.
Certainly has. It's these countries in this part of the world looking for alternatives. You alluded to the tensions between the U.S. and China, that rivalry is in focus. So what extent is this forum an opportunity for military diplomacy between the two sides?
It has always been a platform for military diplomacy. You get the biggest defense representative here. In fact, when it comes to the U.S., Pete Hegseth, the U.S. Defense Secretary, will be representing what they call the most robust delegation from the U.S. in years. But when you take a look at China, for the first time since 2019, it won't be sending its defense minister, Dong Jun. Now, we saw how Dong Jun engaged with his U.S. counterpart last year. They were in deep conversations to talk about how, they can allay those risks in this part of the world. That's not to be this year. Perhaps it is a messaging from China. Remember that just yesterday we heard from Marco Rubio, the Secretary of State for the U.S., talking about aggressively revoking U.S. visas for student visas for China as well as Hong Kong. And that's prompting a lot of questions about the outlook for trade negotiations. That has implications in terms of its defense. Of course, take a look at the response that we're seeing from the likes of New Zealand. We had a conversation with the defense minister just earlier talking about, how a country like for a country like New Zealand is looking at positioning itself. Take a listen.
I have no doubt at all that the relationship, the Five Eyes relationship, is very trustworthy, and that we can absolutely work with the US and trust their information and what we provide them, just as they do with us. It's a very long-standing relationship from just after World War II. But also, for a small nation like New Zealand to not be part of that would be, I think, a real tragedy for us. And it's one of the ways that we deal with the cyber attacks that we're constantly receiving, but it's also about understanding and trying to know where New Zealanders are in the world, how safe we can keep them, but also the Pacific region itself. Very important relationship, and I haven't seen any issues with that at all.
We talk about how the new world order or the global order has been upended by the US. The US is pushing back in defending democracies around the world, and some say that paves the way for China to play a bigger role in this part of the world. That has been China's narrative anyway. Are you seeing any evidence of that?
Well, we're seeing a certainly more robust position from China in the Indo-Pacific region. We've seen it around the Cook Islands. We're seeing it around the South China Sea, the Taiwan Straits, all of that. And what I would say is that the role in the Pacific for larger nations should be one where we work with Pacific nations. We're a Pacific nation ourselves. We say, well, we work with each other, we help each other, but what we never do is dictate, and that is very important. So I think, China has been increasing its work in the Pacific, and we're also seeing that the US is still working out quite where they're going to be. But I think I'm hoping the message from Secretary of Defense Pete Hegseth is going to be very strongly that the United States understands it's a Pacific nation. It's a Pacific nation with a lot to lose if it's not involved. And I think that the US will stump up in the Pacific.
As you said, Pete Hegseth will be here representing the U.S., but we're not seeing the presence of the Chinese defense minister. How are you reading that?
Well, that's a very unusual situation. So the Chinese defense minister, Admiral Dong, has been absolutely at almost everything that we could possibly be at together. So I'm surprised by that. I'm not sure what to read in it, but I do think that there is a Chinese presence. He does have a deputy here, but it's unusual. And I think it's something many nations will be slightly surprised about.
Would you say it is a missed opportunity to have high-level discussions with the defense minister of China at a time of great uncertainty in the world?
Well, I think it's up to China. I mean, they'll decide who they send, so I don't want to read too much in it. But it is surprising. And but look, people sometimes can't attend for various reasons, and no doubt they've made a strategic decision.
And we have plenty more on deck here on The China Show. Stay tuned. Right, just about an hour into the cash market session. I mean, almost everything is down with the exception of less than a handful. In fact, Li Auto is one of those in the green right now. That's an earnings story. I mean, it's also a positioning story, given maybe how the downdraft we've seen across the sort of EV space. Horizon Robotics, Lenovo, and Kingsoft just showing you effectively what the big drops are as far as that's concerned. So it's not for the faint-hearted, and Avril, you probably need nerves of Nippon steel on a day like today.
Thank you very much for setting that up for me. Nerves of steel. We are, of course, keeping a close watch on any developments on this U.S. steel, Nippon steel deal, right? And the Trump administration recently has been seen to be warming up to this idea. We're expecting Trump to deliver some remarks on this later on Friday. Plenty more ahead. This is Bloomberg. It's 11:29 a.m. in Tokyo, and Japanese markets going on break in a minute. Let's check in on how they're faring. It's really a down day, I think part of the broader narrative across the region as investors really grapple with this tariff whiplash that's been layers upon layers of uncertainty when it comes to the levies we can ultimately expect out of the U.S. And of course, against this backdrop, we are seeing these trade negotiations underway between the U.S. and Japan. I think the envoy for the Japanese side set to meet his U.S. counterparts. But we are also seeing these ructions in the bond market, particularly on the longer end in Japan the past couple of weeks, right? And that is really feeding in through from what we're seeing in treasuries. So a bit more calm, I suppose, when you're looking at the Japanese 10-year 151 is where you're seeing yields at the moment. But of course, we've been trying to digest all the data out of Japan, and we had Tokyo CPI that came out just this morning, following on from, I think last week it was, a hot Japanese inflation print that already followed on from a hot Tokyo CPI print. Now seeing that confirmation of Tokyo prices rising by the most in 2 years. And this is pretty much across the board, right? Whether you're looking at the print excluding fresh food or excluding fresh food and energy as well, Dave.
Yeah, and you know what? I'm kind of glad. This is hindsight, of course, because I didn't know it was going to happen. But I'm off for some days next week, and it's pretty a good opportune time because I don't think I'm ready. We have, I think, a 10-year on the point you were making on the long end and long faces there. I think we have a 10-year and a 30-year JGB auction next week. Yes, June 3rd and June 5th. So let's see how, and hopefully uneventful that might turn out to be. Top themes today, as you can see, most things, of course, to Avril's point, is sort of tariff turbulence and reversal we've seen, and really a lot of pressure on that. And of course, speaking of pressure, right, the conversations around the first meeting between the Fed chair and the U.S. president, and what came out of that meeting, of course, in the White House overnight. Right. Now, speaking of trade, let's get more on that, and really on the Taiwan side of things here. You have Taiwan saying that it still is working to secure a trade deal with the United States. The Taiwanese Deputy Foreign Minister told us, in fact, that it is committed to negotiations.
The trade talk went smoothly. We are continue to have a conversation. And there are many technical details to settle like any trade negotiation, never been the easiest thing to do. So we are now in the process.
Meanwhile, Japan's top trade negotiator heading to Washington for his fourth round of trade talks with the U.S. Bloomberg's Tokyo bureau chief Isabel Reynolds is with us. Isabel, what do we expect from this next round of tariff negotiations?
Right. Well, it's always very difficult to predict the outcome of a particular round of tariff negotiations. As you say, this is the fourth round. Minister Akazawa will be in Washington to talk to Bessent there. It turned out that the third round of talks, Bessent wasn't present, so we're not really sure if that counted as a round of negotiations. But there's been very little information to indicate that we're near any kind of resolution to this. I mean, the principals themselves are not talking, but we do see sort of leaks in the press saying that the US side is not even willing to discuss the tariffs on autos, for example, which are a key item on the agenda for the Japanese side. Japan has said it doesn't want to rush into any deal that would be unfavorable for the Japanese economy. But on the other hand, the clock is ticking down towards July the 9th, which is when those full sort of 24% tariffs would kick in across the board for Japanese exports to the US. So that will be something that's adding pressure to Japan. Another source of pressure for the Japanese side is that there's a national upper house election later in July. And at the moment, as you mentioned earlier, inflation is getting worse in Japan. Consumers are feeling the pinch, and the government will be wanting to offer a sign that perhaps those pressures on the consumer will lessen in the future. One thing that Japan may be hoping will offer a bit of hope is this potential deal between Nippon Steel and US Steel, of course. At the same time as we're expecting the minister to be talking to Scott Bessent, we're also expecting Donald Trump to perhaps be talking about this potential deal that he seems more favorably disposed towards. And I think Japan will be hoping that that kind of favorable atmosphere, more optimistic atmosphere, will help him lean towards perhaps lessening the tariffs to some extent.
Now, Isabel, I mean, not short of moving parts, certainly, and as you point out, we're moving into a deadline here. Talk to us about specific tactics that the Japanese side perhaps has been deploying or using to reach, hopefully, a breakthrough here.
Right. Well, we're seeing all sorts of reports in the media here in Japan, and it almost feels as if Japan is kind of throwing everything at the wall and hoping that something will stick, something will seem to the Trump administration to be favorable enough to warrant a sort of change of course on tariffs. So, for example, this morning we saw a potential agreement on working together on rare earths. But we've seen all sorts of other proposals sort of reported in the media. There was a report the other day about a joint sovereign wealth fund between Japan and the US. Which was a very mysterious idea, but it may again be something that a sort of gesture of friendship that Japan hopes would lead to a favourable result for them. And another thing that has come up in recent media reports in Japan is about Japan paying more to host the US troops in Japan, who are stationed mostly in Okinawa, as you know. In the previous Trump administration, there was enormous pressure to cough up more money, essentially, for the privilege of hosting those troops. So perhaps Japan is hoping that kind of gesture could figure into what's going on. But it's very hard, as I say, to figure out whether any of this will make any impact on the talks themselves.
Yeah, that was a curious one, a joint sovereign fund, isn't it? Isabel, thank you so much. Isabel Reynolds there, our Tokyo bureau chief here. I think where this also comes together is when you look at autos, for example, right? So you have a sort of the tariff uncertainty casting this sort of deep, this cloud over the autos industry. In Japan's case, of course, autos and auto parts. And then on top of that, you have competition separately to deal with coming from the Chinese side and the EV players there. In fact, there's a fantastic piece today on this very note. How do we need to be looking at Japanese automakers in light of competition coming out of the Chinese? Hideyuki Sano, of course, joins us, our senior stocks reporter on Tokyo, for this specific piece. Hideyuki, Japanese car maker shares, they've been affected certainly with the EV price war started by China. How do we look at this from here on?
Hi there. So far this week, if you look at the share price of Japanese car makers, they haven't really affected compared to Chinese EV makers so far. But this has become a talking point of investors, and in fact, many long-term investors are quite worried about the outlook of Japanese car makers. Now, they have been already sort of decimated in China because of stiff competition from Chinese EV makers. Now, there's worry that they might also lose Southeast Asian markets, which has been a stronghold of Japanese car makers. And if that's the case, that leaves the U.S. market is the only sort of lucrative export market. But as we all know, they have their own trouble in the U.S. market as well. So at the moment, there's very little reason for investors to think that the Japanese car makers have any chance to boost their earnings in the near future.
Yeah, Hideyuki, I was just going to ask, how exactly are markets looking at the earnings outlook for these automakers?
Right. So if you look at the analysts' estimate, the expected EPS for Japanese car makers have dropped already something like 25% over the past year, and it's down about 15% so far this year. And likewise, they have cut share price targets by almost like the same margin, about 25%. So analysts are getting very cautious about that. And because of that, at the moment, Japanese Japanese car makers' share prices are valued at near the high end of their usual range in terms of valuation. And if you expect the U.S. to ease its tariffs, then that might make sense. But as we all know, there's no clarity on that.
Yeah, I'm just looking as well at these Japanese stock gauges, and I think the automakers are among the bottom few performers so far this year. Our senior stock reporter Hideyuki Sano for us there. Thanks so much. Plenty more ahead. This is Bloomberg. Now, even as we keep an eye on some of these US dollar moves, of course, we saw not so long ago these massive gains in the Taiwan dollar. Taiwanese Deputy Foreign Minister is saying that market speculation that the Taiwan dollar's recent gains were a gesture of goodwill to the US are an overstatement. Chen Ming-chi spoke exclusively with us about how the island's government is handling its currency in trade talks.
Currency is not part of our trade negotiation with the U.S. I think, we are a free trading state, so our currency inevitably have many ups and downs. So I think that is nature. And let's not forget, the whole Asian currencies now in the appreciation trend. So I think including Taiwan dollar is no exception.
Taiwan has repeatedly said that exchange rate was not talked about. But the speculation alone was enough to spark
certainly.
This
Unfortunately,
surge.
that is a thing. So our central bank have to manage this expectation.
There's chatter now even that there's a narrative at least that Taiwan is allowing the currency to appreciate in terms of as a goodwill, like a gift to the U.S., without the U.S. even addressing it. What do you have to say about
I think that is an overstatement about how our central bank are capable of and are willing to do. I think we respect. We don't want to see a very big swing in our currency like any country in the world. I think it's only nature, but we don't intervene the market mechanism all the time. So Only if there is a big swing that is endanger our own whole economy, then we'll try to adopt some policy to make some necessary adjustment.
What about just internally? Has the currency been a topic of discussion?
You mean inside the government?
Yeah,
No.
as you approach these trade talks. What's happening? You guys are not talking about it.
We watch it closely, but that doesn't fall into foreign ministry's obligation or duty to do that. But my understanding is that we don't really intervene, but we are concerned party, and I think our central bank, given the size, they monitor it all the time, but they try not to intervene.
If the U.S. were to bring it up, though, how would Taiwan address it? What's the approach?
The approach is that, again, we have to manage this, and we have to negotiate with the United States, our counterpart in the United States, and try not to create too much of turbulence to the market. I think that is a main goal for Taiwan.
And that was the Deputy Foreign Minister there in Taiwan speaking with Yvonne, of course, there exclusively. Right. Now, another story that we're following this morning, really this week, if you think about it, the whole Harvard story, Harvard University winning, the latest development here specifically, has won a longer-term reprieve from a Trump administration ban on enrolling international students. Now, Harvard sued the administration last week, claiming the ban was illegal. Now, Washington maintains that the Ivy League school failed to comply with terms of its certification for enrolling foreign students. Now, on Thursday, the U.S. then moved to start revoking visas for Chinese students with connections to the Communist Party or studying in critical fields. Avril.
Yeah, I mean, this is really an ongoing saga, right? And our Bloomberg opinion columnist Karishma Vaswani has been weighing in. She says that the U.S. president's move on foreign students is causing uncertainty among these Asian families. They've obviously been investing heavily in their kids' Ivy League dreams. So, Karishma, what are you seeing in terms of the impact these moves are having on the higher education pursuit?
Yeah, well, it's come as a massive blow, Avril. And I think at the heart of all of this is what you were just saying. It's the fact that there's so much uncertainty now in the mix. An Ivy League university degree, or even, I think it would be fair to say, getting a university degree from an American university, it's very much part and parcel of the Asian dream, right? Parents like me, families around the region, they've invested thousands of dollars, if not hundreds of thousands, in order to sort of perfect the profile of their child to be able to get into one of these schools. And then imagine the situation, and so many people I've been talking to over the last couple of days, for some of these families who have done that, their children are almost ready to, get to Harvard or other universities which have yet to be targeted, but the concern is that this could spread even wider. And what do they do now? They're not sure whether visas are going to go ahead in terms of appointments. They're not sure whether or not they can actually get to university when they're supposed to. And I think overall, what this is doing is it's sending a message to Asian students, international students, who make up a big bulk of, U.S. university entrants, applicants, I should say. It's sending a message to them that the Trump administration is saying, we want far fewer of you on our university campuses.
Karishma, to your point, it's also about how they've been, working towards this goal, and now you're not even sure whether the goalpost is still there or where it even is. How are these families then recalibrating their options?
That's such a good question, Avril. And I think, at the heart of this is this idea that is America really worth it in terms of sending your child for university in the future? On the one hand, it's a coveted place to go to study. I want to make sure I make that caveat, right? Because it's not just about world-class education. It's also about the opportunities that you might get if you end up getting a job there. And that's always been part of the plan for so many of these families. But on the other hand, there's a massive expense. On average, a degree there can set you back maybe $100,000. If you're going to a prestigious university like an Ivy League, that's 3 times, more than 3 times that. Parents have sort of sacrificed, decades sometimes in order to get their kids to these universities. And now they're thinking, well, maybe I need to make alternative plans. And there are so many universities that are in the mix, so many countries that want this top-tier talent. You've got Canada and the UK sort of stepping up, Australia as well. In Asia, universities like the University of Tokyo, Hong Kong University, and others are saying, hey, look, you're top-tier talent. We want you to come to our shores on our campuses. So, these kids will have options, but it feels like the US is kind of closed off to them for now, or certainly become a lot more uncertain in the future.
Karishma, thank you so much. Karishma Vaswani there, her opinion columnist. You can check that out, of course, on your Bloomberg terminal. Right, an update here, and again, this is a different strand, but the same general sort of story between the U.S. and China. Reuters is reporting that the U.S. is planning arms sales to Taiwan that would exceed what we saw during the first term of Donald Trump. So the U.S. Headline is the U.S. plans to ramp up weapons sales to Taiwan, that Trump aims to exceed, of course, the transactions from his first term. Now, separately, here in Hong Kong, you have the foreign minister, Chinese Foreign Minister Wang Yi, is attending the signing ceremony of the Convention on the Establishment of the International Organization for Mediation in Hong Kong. Live pictures, as you can see on the screens, of the foreign minister here in the city. Plenty more ahead. This is the China Show. Welcome back. Right, so if we're going into the weekend, and if you're, I guess, still deciding what to do, so you're a football fan or not, Avril, the Man United's actually here in Hong Kong, so they're playing a match later tonight. I mean, the weather certainly is not cooperating. I think they're coming off a match in Malaysia, if I'm not mistaken, which really maybe didn't go quite to script. But yeah, well, we'll see if the redemption could be finally here. Let's put it that way, because we've been waiting for, about 10, 11 years now. But yeah, are you a Man United fan, Avril?
I am not. But, I mean, to your point about this string of defeats, right? I think some Singaporeans would call it wait long long when it comes to any odds at winning things. But yeah, I mean, you've seen how their results just make them not qualify for any European competition next season, right? I know you want to talk about this in the event kind of dynamic, but I guess also worth noting how when it comes to the stock of Man U, it's down, 20% so far this year? And them not qualifying...
And still doing better than the team.
Negative... Yeah, that's a good point. Negatively affecting their income streams as well. But, that's not the only event I guess we're keeping an eye on in Hong Kong this weekend. I think there's also an Asia Dragon Boat Festival that's coming up in your neck of the woods, David.
Yeah, which perhaps is something that I would be more compelled to attend. I would, for one, I would invite you to go, Avril, to the Man United match. But first, since you're in Singapore, and second, I don't want to go. Speaking of things to look forward to anyway, going into the weekend, is we have PMI numbers coming out. I'm going to be paying attention to that one this time tomorrow. It's the first one, of course, for May. Comes out on the weekend. So apart from that, we'll be watching that, of course, as they did the 90-day pause on tariffs lead to any front loading. And I think we're going to get your first indication of that in terms of, whether or not we saw a pickup in new export orders, that sort of thing. That being said, Hang Seng Tech, maybe this is a separate story, is down about 3% in terms of market breadth, quite negative, just about across the board, with the exception of a few here. BYD leading losses here, not so much on the HS Tech. I think it becomes an HS Tech stock in a couple of weeks, if not 1 week, because it was added to that 4% now, should be session lows, $3.90 now a pop. NetEase is also very much in focus. We thought we could make a run towards all-time highs. We're pulling back from that, which is about 206 if you're curious what that is. We're down about 4%, broadly speaking, of course, and the pullback we're seeing there across Chinese tech and broadly risk appetite here going into the weekend. And yeah, CGB rally taking place after what successive days of a melt up there in CGB yields. But yeah, so we will leave the markets there for now. We will see you all on Monday. That's it from us here on the China Show. This is Bloomberg.